Hey, listen, let's talk tax tips and tricks for small businesses. Nope, I'm not talking about filing taxes in general. I'm talking to small business owners. If that's not you, then go ahead and log off. This is not for you. I'll wait. Hey, but if you are a young professional that makes pretty good income, even up to six figures or more, and just never got control over your spending more than you earned, and never really allowed yourself the opportunity to begin creating a plan for your money or your future, just earning and spending, leaving no room for savings or building anything for your future, then pause for a few minutes. Let's chat. This is for you because I've been there and I get it. Now, sit on down. Let's talk small business taxes. Okay? Now, let me be fair. You're probably wondering why focus on taxes for small businesses and not taxes in general. I'll tell you why. Because one of the main tax benefits for the middle class is owning a business. Let me explain. First, let's recognize that we all know that we must pay our fair share of federal taxes and state taxes if that's applicable. Why? Because taxes help with so many things, like funding programs and services. We're talking about health care, welfare, social services, job training programs, roads and public schools, and our public parks. But we also must recognize this common denominator in all of us. We all want to be appreciated and rewarded for our hard work. Now, concerning taxation, so when we work hard and we can show that we have done our fair share, how do we get recognition for that besides paying our share into the system by way of paying taxes? We understand that yes, we see those better roads, we see better schools, public parks, and whatever else more. But the government also gives us as individuals recognition as well as incentives for our participation. You see, well, yes, I'm talking about participation rewards for all the participants. You may ask how? Well, think it through. We file a tax return, and then the government determines what we receive in return for participating through receiving credits, deductions, and for some refunds. Yes, we receive our rewards through credits, deductions, and refunds. What does this mean? Let's take a closer look. If we look at credits, when we talk about credits, we are again talking taxation. This is dollar for dollar. For every dollar owed, there is a dollar applied to reduce that amount, thereby reducing the amount of taxes that are owed. Okay, let me give you a simple example. Let's say you owe $2,000 in taxes, and then you get $1,000 in credit. So now what do you owe? Just $1,000, right? All right, still on credit. There's two types. You got refundable and non-refundable. Okay, it's refundable only if you do not owe. So that's going to be a reduction plus a refund. It's non-refundable if it just reduces your tax liability. So, what do your credits look like on your tax return? Let me give you some simple examples. There's three main refundable credits you may see: earned income credit, child independent care credit, American opportunity credit. See, to get the credit, you got to do something. In other words, you got to participate. Again, it could be per individual, it could be per family, or it could be per couple if it's a married couple. And it's based on what? Look, we're talking taxes. So you know it's more than likely going to be based on income. Your AGI, adjusted gross income. That's the total amount of income after your deduction. So how you qualify? Again, there's categories. Could be single, head of household, could be widow, you could be married, filing jointly. Again, these are the groups and categories of individuals that may qualify. But if you filed married filing single, you might miss out on some of these credits. So you might need to be sure to check with your tax professional for details. Now, with the credit, what's the objective? What's the objective here with the credit? First step you're going to have to do is figure out that poverty line. And then you take a look at that individual who's filing taxes and see if they are below or above the federal poverty line. Yet, they may need a little credit for their contribution. In other words, they may need a little assistance or a break, some may say. Now, this is not the only group that get credit, but this is a significant large size group that receive credit. Who are these individuals? Mostly low to moderate income individuals and families. Now, their income can range. Now, it can go anywhere from $10,000 to up to 33 or so $1,000. Okay. Let's look at another example. Let's say for single, we're looking at the Texas property line and maybe like a little above $15,000. Now, again, a single individual, the closer that income gets to that $15,000 line, the less credit this individual will receive. Okay? Now that's credit. Now let's talk about deductions. What is the deal with deductions? Now, deductions is the amount from the that's going to be deducted from the taxable income. Okay, so it is indirectly going to lower the amount owed. You want some examples? Let's say you have a mortgage interest, you have a student loan interest. You can deduct your charitable contributions. And you can also deduct educational expenses. There are some health insurance expenses you can deduct, property tax, and hey, we're not going to forget the business deduction. Okay? I think you get the picture. Now, I'm going to give you an example. Let's say you got a 30,000 AGI and you get to apply $1,000 because you have student loan interest deduction. What does that do? What does that do to your AGI? It moves it from the 30,000 to the 29,000. Okay? Now, let's think about these deductions. What is the objective? What is the objective for the deduction? Now, I want you to see the deductions more like a discount. You're just going to be able to shave a little bit off the top, like a rewards card or some coupons. So just imagine if that rewards card gives you a 50% discount. That'd be pretty good, right? Well, who are the individuals or the groups that can benefit from deductions? We're going to move up a little bit to the middle class and the upper middle class, individuals and families. Now that range of income can be anywhere between the 30,000 all the way up to 400 plus $1,000 or more, right? Now, this is where you get into decision making process of trying to decide on whether you're going to take that standard deduction or you need to itemize your deduction because it all depends. If you know that your deductions are far above the standard deduction, then of course, itemize. I would actually suggest that you try both. Take a look at the standard deduction and then compare it to the itemized deduction and choose the larger deduction of the two. Let me show you an example how this works. Let's say your income is $40,000 and you apply the standard deduction at an average, well, I think now it's like $13,000. What are you going to do? Then what does that leave? Like 20 some thousand is what you pay taxes on instead of the full $50,000. As I stated earlier, we're about to get back to the business. One of the main deduction tools is that home based business. Why? Why? It's because middle class and upper middle class, we don't receive many credits. Most credits are set to phase themselves out once you exceed a certain income threshold. So past that income threshold, This group of individuals' benefits fall mostly in the deduction category. Now, in most cases, you're going to have to itemize all those expenses to calculate the deductions for your business if you are managing your business out of your home. And that will be even more deductions. All those deductions will more than likely supersede the standard deduction. Now we're finna start talking about some write-offs. According to the IRS, these are the things that are ordinary and necessary for you and your business to operate. I need you to understand this distinction. Those itemized deductions, they only lower the AGI, but those business expenses, they lower the taxable income and lower the AGI. This is why record keeping plays a major role in proper business management. Now, hold up a minute. Now that we got all that cleared, it's time to get down to the nitty gritty. Let's go. Again, this is for business owners. If that's not you, then this ain't for you. I want you to recognize I'm going to focus on tax tips and tricks for home-based businesses. So if you're operating your business and managing your business from your home, again, in your home office, then I'm talking directly to you because you are the type of person that is not afraid to invest time and money in yourself and your future, investing and building something that can grow. Hey, listen. Even if you have a regular 9 to 5, that's okay. You too can still start and grow a business and even invest some of the taxes withheld from your paycheck to grow your business. Okay? Let's get this clear. When you're evaluating the tax code, you need to understand that within the code, there are provisions and guidelines for several groups and categories. And one of the two distinct groups is employee versus employer. Owning your own business open up the tax code to you, giving you access to all the rights, benefits, breaks, advantages now, as well as responsibilities, risk, and liabilities, like all other business owners and entrepreneurs. But the benefits in most cases, when done properly, they're going to outweigh the latter, giving you access to tools and incentives that the IRS code designed just for business owners. Now, let's walk through some of the details of a home-based business and those deductions. If you learn these rules and apply them properly, they really can save you not just hundreds, but thousands of dollars. Let's clear up some stuff, okay? Let's make sure you're running a qualified business. So I want you to pause for a minute and ask yourself these questions. Did you start a business to make a profit and not just entertain a new hobby? Are you willing to work a minimum of 45 minutes a day for at least 4 days a week? Now, tell me, are you keeping accurate records? Did you answer yes to all my questions? You did? Then you're serious about minding your business and you're ready to break down these business tax deductions, okay? Are you ready? Wait a minute. I can't hear you. Are you ready? Okay, that's awesome. Now I need you to stay ready so you don't have to get ready. This applies not only to your personal business, but your business, okay? How can you know what your business is doing if you're not keeping records? This sound familiar? I hope so because we've already covered this when we discussed our personal expenses. It is important to track and maintain records. And usually, however you're managing your personal expenses and your life, you're more than likely managing your business and your business expenses the same way. Unless you decide early on that you're going to go ahead and seek some help from a CPA or a tax professional. Yes, I want you to start with a proactive approach. Stay ready, meaning keeping track of those business receipts and your logs way before it's time to file your taxes. We're talking about more than just keeping up with your bank statements and your credit card statements. I'm talking about your expense reports, your P&I statements, and all other business documents, okay? Because I want you to come up out of the running blocks properly. In track and field, that is a learned skill. Everyone does not know how to properly set up and position himself in their starting blocks. But once you learn, the runner gains an advantage. Now, this in most cases, they're going to have an advantage over the other runners who do not know how to use those starting blocks because the runners who use the starting blocks use the blocks to position themselves to sprint out and ahead of the other runners at the beginning of the race. And I want you to think the same way when dealing with the IRS. If the IRS ever questions you about your business, you will be prepared because you have maintained adequate receipts and records from the beginning. If asked for proof of expenses and deductions, you got it. No problem. Is that clear? Okay. Now, that is clear. Let me give you my top business tax tips and deductions that will legally get you thousands back from the IRS. These are some of the deductions we at Moolah Management, we check and apply, if applicable, to all our small business students and clients. All right. Number one, vehicle deduction. First, note, it's important to keep track of your mileage. That's including your business mileage. Why? You need this information to calculate the percent of business usage at the end of the year. Let me give you a key tip. Go ahead and connect your mileage with your appointment app. So when you set your appointments and your trips, you also are already recording the location to help you keep track of your mileage. All right, I got another hack for you. Try this. If your business is not seasonal, I mean you running your business all year, keep a perfect log of your mileage for at least 90 consecutive days. Then I want you to multiply it by 4 to get an annual estimate. Okay? And you need to know that there's two methods of deducting your vehicles for business. You got your standard mileage rate, and there's an actual method that you can use. Now, regardless of which method you use, know that you can deduct things like the interest and the sales tax on the purchase of your vehicle and some other stuff like parking fees and toll fees. In addition, if you have a loan on your vehicle, you can deduct the total interest paid during the year multiplied by your business use percentage. All right. So when it comes to vehicles, you're looking at the cost of purchasing and the cost of driving and the cost of operating it and claim those deductions for years to come. Yes, you can. I'm talking about you can claim it for 3 years, 5 years, and for some vehicles, you can claim it for more than that. Now, what I'm telling you, if you haven't figured it out yet, we're talking about depreciation. This is the expense you get to claim in addition to the cost of operating that vehicle. You got costs for things like the oil change. You got to pay for gas. You had to pay for repairs, your car wash, your toll fees. You've been paying for parking and all these other things that go along with having a vehicle. I got another key to tip for you. If your home is your principal place of business, again, you got that home office. It's already established. It's already set up properly. Then all your business related stops are going to be deductible too. All right. So come on, get smart. Turn your personal mileage into business mileage. Now, but what if you're telling me you don't want to write off a percentage of your vehicle over a course of maybe 3, 5 or more years? Just like, that's just way too long. I don't have time. We were like, is there anything else I can do? Yes, absolutely. What we got for you? You can purchase a qualified vehicle and write off 100% in the first year of using what? You got to use the Section 179 deduction, but your vehicle must meet the qualification. All right, because there's only certain types of trucks, SUVs, and vans that meet this criteria. And that's the reason why some people choose to purchase that G-Wagon. I'm just saying. But look, you actually could go out December 31st and buy a new truck and drive it 100% for business for one freaking day, that whole day, and then deduct 100% of the cost of that vehicle. Hmm. But wait. You gotta wait a minute. You gotta make sure it is within your money plan. We're not playing with our money plan. So make sure you can still handle that monthly car note. Okay? All right. I'm just going to give you a few additional mileage tips and we're going to move on to another deduction. Tips can also apply, but these tips, they don't have to just be for your business. You can use these for, just standard deductions as well. Like medical mileage. Did you know that? Anytime you go to the doctor, you need to keep track of your mileage because that might be a deduction as well. Moving mileage. This helps military personnel. Look, if you're in the military and you have to move, you can write off your move. Oh, I got another one for you. Charity work. You can write off miles for charity work. All right, now let's move on. Let's talk about some meals. I want you to remember again, meals are deductible. Now, not all meals, just certain meals. Let's talk about meals with your prospects, all right, with your clients. Those are deductible at about 50%. Okay. How are you going to make that determination? Let me give you some easy tips. You got to remember the 5 W's: the who, the what, the when, the where, and the why. This is what you're going to do. You're going to go ahead before that meeting and book that appointment in advance, right? Now, when you book that appointment, you're going to tell your prospect, you're going to tell them in advance that we're going to talk about business. This is not a girly chit chat. This is not a powwow hangout. Girl, we are going to talk business. And then when you get there, talk about it. I'm talking about talk about the business. Talk about your business before you get there, while you're there, and after you leave from there. Okay? And keep it professional. Find a place that's not loudy rowdy. You are there to discuss business, not to have a shout match. Then after that meeting, get your records. Yes, I know you got your receipt, but you need to record the details once again. Write down the who, the what, the when, the how, and the where, right? Write it down. All right. Now, I know you're probably saying, can I take my family out to eat with me? You can take your family out, but I know what you really want to know. Can you take them out and write that off? Now, the general rule is no, not necessarily. Now, I'm going to talk about the exceptions because there are some exceptions. For example, let's say your spouse works in the business with you. And if you and your spouse both will be working on the project for your particular client and work on it together, then yes, of course, there's a deduction. Here's another one for you. Let's say that prospective client wants to bring their partner or companion. Then guess what? You can bring your partner or companion too. All right? All right. Another deduction. How are your kids? You telling me you have a business and you have kids? Then you need to hire them. Stop just giving them money and put them on the payroll. Kids are expensive. So let them earn it. Let them earn some of that money to pay for their own stuff. There are so many things that you can let them do. Can they be your personal assistant or office assistant? Come on, they can make copies. You show them how to file documents, scan documents, write a letter, answer the phone, respond to an email. Okay, they are so computer savvy. So let them update your computer software, help you with your downloads, install all the upgrades. Content creators, come on, content creators. They can manage your social media account. Give them the responsibility of scheduling your weekly postings. They can respond to the comments in the DMs. Take that $1,000 Apple phone you bought for them and let them be your photographer and your videographer? Or what about doing things like cleaning the office, including the restrooms and dusting and sweeping the floor? So I'm asking you, why hire someone else to do these tasks? You can just research the going salary for the position and pay your child a fair market value. Again, it got to be a reasonable wage, okay? And just hire them and give them that task. You're going to give them money anyway. So instead of just giving them the money, let them earn it and pay for their own stuff. Then guess what you get to do at the end? You get to deduct it as wages. Okay? All right. All right, let's see. Another deduction, travel and vacations. What about it? What about travel and vacations? The key to successfully writing off your trips is making sure you plan way ahead of time. This includes defining the purpose, the reason why you're traveling. You got to have a pre existing intent. You should go ahead and do what? Schedule your appointments way before you depart. So you're going to take the time and keep track of the cost of what it costs you getting there and the cost of getting back. Why? Because that's going to be your transportation expenses. Now, some other things you want to keep track of is all your day to day expenses. What did you pay for food every day? What was your lodging or shelter cost? And again, in some cases, even the clothing for the trip. You see, your business trip can be deducted when we're talking about the lodging and the stay, it can be 100%. And we already told you you get the deductions for the meals at 50%. Okay? Now, let me give you some more. Remember the days that you traveled. They're going to be considered as your business days. So you need to make sure you spend the majority of the day in attending your meetings, those conferences, and those trainings. You need to put in at least 4 hours and a few minutes, like a minute or two, right? Then the rest of the day can be yours to enjoy. But you need your receipts. So go in that meeting, in that conference, and you grab your brochure, you download your agenda and itinerary, and keep it as your receipt. Now, wait. I want to talk about staying overnight, okay? Now, if you're staying overnight, make sure there is an overnight stay in a bed that's not yours. I ain't trying to be funny. I'm just talking about a place away from home, like a hotel, an Airbnb, or even a friend's house. Or else you will only be able to deduct your transportation. All right. I know you're wondering, I'm going on this trip. You say I can take my spouse, I can take my companion, but can I take the whole family? Look, like I said, in general, your spouse and your family can travel with you, but that don't mean that it may be a deduction. Again, if your spouse is making money for you on the trip, then again, he or she can go with you and you can deduct those expenses. In order for this to work, that spouse got to be licensed to do something or be employed in your business. And that means they have to have a reason to be on the trip, be an active participant. So they give them a duty. Or they're going to help you present and run your presentation while you're there. Networking, or they're there to help network at the event. There's extra classes, or they're going to take classes at the convention or even the meeting. But again, they got to have pertinent responsibilities in order for it to be a deduction. All right, the whole family. You have kids, not just your spouse. You want to take the whole family. You want to take the kids. Can that family, kids, the whole family go? And again, you can always take your whole family. But the question you're really trying to ask, can you deduct the cost? Now, in general, I'm going to have to say no. But the exception is if they all work for your company and they all have a role at that meeting or convention. Again, content creators, they're always looking for opportunities to create content, take pictures and videos and produce videos for you. I'm just saying, put your family to work. Oh, child. Oh, my goodness. Y'all, There's so much more I can discuss, but I don't have time to tell it all to you. But this is what moolah management does. For example, showing you how to make Saturday and Sunday business deductions days too. How, you may ask? That's simple. With moolah management, we'll show you how you can sandwich those days between other weekdays. If you set up Friday and Monday as your business days, you can deduct all the on road expenses for Saturday and Sunday. And catch this, work is not even required on the weekend. And we haven't even started talking about holidays. All right, that's enough of that. You know what? That's just enough because there's so many in too many other areas that I can cover, but I just can't cover them all today. I can be talking about medical expenses. I can talk about health insurance. It is so much more, but just not today. But what you learned today, I hope you learned that the IRS code gives us business owners hundreds and hundreds of deductions. I just can't cover them all, but I hope I've covered enough to keep you um, intrigued and help you to understand that we get it. We are okay with doing our fair share of contributing to the system by way of paying taxes. But we, as business owners, we wish to maximize our efforts as well as try to learn a little tax tips and tricks that can show us ways that we can accomplish what needs to be accomplished and to save what we can save whenever we can. Okay, I hope this information assists you. And like I always ask, I hope it sparks a little fire for you to take just a little action in protecting and maximizing your money plan for you and also for your business. When? Today? Well, you know what? That's a wrap. Because that's all the tea I'm going to spill today. But let me remind you, this is a safe space. This is our Susu room where family, friends, and our community, we gather, we share ideas, we share tons of thoughts. And so as I share more information with you and you feel that you gain value from it, I would like you to at least let me know that you would like to receive more information. And if so, you can go ahead and join the Young Generational Wealth Builders community because there's going to be a link for you in the video below. Because it is in this community that we will teach you even more ways to seize, manage, grow, and protect your money and legacy through learning concepts of law, financial literacy, and legacy planning. Why? Because you're just like us. We got the money, but we learned that with no plan, it would just lead us to no legacy. So let's go get a plan. We're going to get it together, just one step at a time. But right now, I want to thank you for joining me. Next time, I'm going to see you in the next video.